Hello, this is Cryptolyze. I hope you are well. This Tuesday, 12 December 2023. We meet today to talk about BTC, to talk about crypto because things are moving. Things are moving in regulations. Things are moving around FTX and Binance. It's important to understand all that, and in terms of the graphics, yes, it moves too. Perhaps not as much as desired, but in any case, we see it all together straight away. If you want to train and really enjoy bull running, it's simple. There is perfect, complete, free training available. It's through an educational journey that teaches you everything about blockchain, crypto, investment, technical analysis, and trading. All this for free in comments and descriptions. You have exercises, multiple choice questions, modules, videos, guides, everything to support you in your progress. We come back to one of the tweets that I shared on December 9th, which were documents that were disclosed following Binance's agreement with the Department of Justice. I invite you to rewatch the information directly on my Twitter, but you must understand that it has a very strong impact. I had already started to explain it to you in my video about Binance and the impact of the Binance agreement on cryptos, and in particular on the future of Binance, and that it was not over. It is indeed far from it. We're having ideas of what it could look like. Already, first thing, we will certainly have a complaint from the SEC which will arrive, showing that, following the supervision, they realize it is the Americans, in which they are realizing that, indeed, there is perhaps not only that and even much more. So the SEC is accelerating, the Department of Justice is going to be coming too, and the CFTC is going to be coming, I think, also on the case. So in 2024, we will certainly dissect Binance to go much further. And that is what I explained to you. Certainly we risk having much stronger actions on Binance and on all the projects which have crossed Binance at a given moment, with potentially the SEC, which will use it for its actions on securities and the notion of transferable security because they have access, I remind you, to all Binance data. With the deal that took place between Binance and the USA is really looking for this type of information. The proof is that American taxes will demand $24 billion from FTX. So understand that FTX, since its crash has been punctured by the rectifier, therefore by the liquidator, it was more than $1 million, I believe, per day roughly in costs. So imagine that it costs a lot. And now it is the state which demands $24 billion and which will come before everyone else, before investors. We already knew this information 7-8 months ago. It had started to leak. I told you don't worry, it will come back at some point. In fact, it has come back. It went from 44 to 24. But it still hurts very, very badly to the point that certainly there will be no monetary return for the people who lost their money with FTX. Because the state will come first to see if there is a consortium that agrees with the state to define a fair distribution method. I think it will be very complicated because crypto investors are not really appreciated, that's for sure. And we also see something else that is happening. To accelerate at the level of the USA at the end of the year, and that is not positive either. It is the law on anti-money laundering on crypto. So the problem is that there's not just that in this law. If that was all there was, we wouldn't have any problems. The problem is that we are really on a hyper-restriction of crypto and a definition of crypto as being a strong means of evading U.S. tax, of participating in different types of traffic. So we are in the hyper-characterization of the crypto asset, and we would arrive at a system which would be at least like the banks, or even perhaps more restrictive than the banks. Which would be complicated in the long term. We will just end on this little note. We have El Salvador, which is going to launch Q1 2024. Its leaps on Bitcoin. This is the project that the president gave following the launch and validation of BTC as a currency legal in El Salvador. They explained that they wanted to transform part of their volcanic region into a huge BTC mining factory on renewable energy, which is currently not used, and that should therefore be done in 2024. What is interesting to see is that the idea had been discussed in 2021, and suddenly in 2022, 2023, everyone was criticizing El Salvador and saying that it hadn't worked, that it had been a huge flop. Like many now on this channel, you understand very well that it was not a huge flop. It was just put aside while waiting for a much more interesting wave. So a bull run in this case, or a preparation for a bull run. To be able to bring the project to investors at the moment when we start to have an app that is being made, and that's the right way to manage. And that doesn't mean that it was a failure. It means above all to say that it was, once again, well managed, well thought out in this way. And I think that in fact it will be a very good opportunity for those who wish to invest in BTC mining on renewable energy relatively easily. It could be quite nice. We will wait for more information to see how it will be built. Another little information that I wanted to give you and that I actually saw this morning very early, it is at the level of tracks. We have that there is our artificial intelligence ETF which has been released. We are still waiting for the RWA. Besides, this is new too. They are in the process of launching their private sale, so I will have to look at it in which what will interest me will really be here in terms of the thematic part. You have artificial intelligence, or you have the possibility of having a site based on artificial intelligence. The only negative point is that we don't have Taio, which is in it. We will have Render, Ocean, Golem, Fetch Singularity, which are clearly the biggest that we can find after it, is the same principle being that they use Fireblock, which is one of the giants in asset management. If the token, I think, is not on Fireblock, they can't put it in their ETFs, as of that they will be instantiated. I think that they will add it gradually in the different ETFs, so it is always very practical. If you are interested, you have the information in the description. We remind you that today we have the IPC core, which will fall, and above all, we will prepare for Wednesday. We will prepare for tomorrow. Don't worry, it's always the same. The day before an FOMC or a strong statement from the Fed, we have a market which is erratic, and therefore we won't have to worry too much about the movements which will take place today. At the SPX level, we continue to push a relatively strong week. What is interesting to see is that at the Russell 200 level, we are still also on weeks which are rather strong. I have not done any analysis for some time from this zone. What is interesting to see is that we still have a very nice accumulation of wick-off which is arriving, with a lowest, second lowest. So the retest, we have the selling climax, STB, and here we have a liquidity gain. An ST here, so it's just a retest. And here we have the STB with the taking of liquidity and upward acceleration following the taking of liquidity. We could also simply see a range in the position in which we are heading towards this upper limit of the range in which we have overtensions, but above all, systematic rejections. 1, 2, 3, 4, 5, and we could have a sixth here to go and retest, the lower part. And what is interesting to see is that we are also in this zone at the level of the SPX, in a zone of potential rejection that we know, that we have seen, 1, 2, 3, so we can also see redirect on it. So there is a possibility of having a downward pressure which could arrive at the end of the year on Q1 2024 at the level of the USA. So we will have to monitor especially that we have a VIX, which is found when even very, very low. We recall that VIX is the volatility index of the SP 500, and it is the representation. Hedging options which are in place therefore imply the fear of the market, and we see that the lower we are, the more we have a tendency to have a retracement, and we are heading towards the lowest. Therefore, in the accelerations 2018, 2019, before having the COVID, so with the big flash crash that we may have had, and we also systematically see that when we touch this area, we generally have a reaction as well. So here, we are in the process of structuring in this zone, which means that we are in a form of market hesitation, which is characteristic of what is happening in the USA. We do not forget that we are in a form of general uncertainty. Are we on a hard landing? Are we on a soft landing? General communication over the last 3 months has really changed. We are moving from the notion of hard landing to soft landing. That's it. It's over. And we are clearly awaiting the pivot from the Fed. If we don't have the Fed pivot or these types of indications, I can assure you that we will start with an upward acceleration at the VIX level, and a bearish acceleration at the level of the SP 500 and all American indices, especially since oil should not take long to determine its cycle, that is. Are we going to stay in a period of ranging here, or are we going to succeed in raising the price to the next level, S of the 75? Something that OPEC and OPEC are waiting for to clearly maintain their growth. So it's a truly geopolitical struggle, and obviously it has a very, very strong impact on oil. And once again, I shared with you an article which was very interesting on oil, to what extent oil was precisely manipulated not by geopolitics, but also by algorithmic traders with enormous volumes. And obviously we can expect a reversal because the more volatility there is, the more interesting it is for trading. And this is exactly what we are also seeing at the BTC level, where we have an increase in volatility. I really like this indicator because that suddenly it is the daily volatility over 24 hours crushed on a weekly candle. This allows me to actually see the volatility within the week. So this allows me to see here, the more I have a wick that will be important, the more that means that there was volatility during the week, and the smaller I have a body, the greater the volatility in this week has been weak. This means that the days, we can have a lot of volatility in a day, but over the week, overall, we are back at the starting point. And what is interesting to see is that this is not the case. We still have a big body with a small strand, which means we don't have to swallow it all. And this is a little bit of what is happening with BTC. You will understand exactly where we are currently. You have in the description and comments the possibility of downloading my strategy guide on investment and trading in cryptocurrency, in which there are 30 pages to know everything about how to proceed, how to benefit from this bull run. And in addition, in description and comment, you also have the possibility of having access to our newsletter, which is available, and which will be available every month. The links are in comments and descriptions. At the level of BTC, we therefore had the beginning of a retracement, big red wick. We are trying to retest the CME here, therefore the CME gap of rupture, finally of rupture in any case of acceleration during the weekend, which for me is not yet retesting. I will explain to you why. Just now. But we also have a rejection signal on the upper part here of this range, which was the range in which we remained, Q1 2022, following the very strong bearish breakout, all right? So it is logical that following a very strong acceleration, we find ourselves in an inverted pattern. Here, in this same range of accumulation or reaccumulation, here it is a wick-off redistribution. There, we could very well have a reaccumulation for a while before being able to leave. It would be completely logical at the same time. But once again, does logic have a place in markets? Not necessarily, we don't forget it. In the short term, we can clearly see that we have had this downward acceleration. We talked about it yesterday. Retracing, reworking. So we didn't go for the bullish retest. It's a shame because we did have the bearish impact. But what's interesting to see is that here we just went for the low. All in all, we didn't go after the CME gap. We didn't make a real bearish movement, okay? That for me is not really the second leg. We are rather in preparation for a second leg. We could even see here another reacceleration to retest another times this level before potentially making a bearish reacceleration. For me, really, the bearish reacceleration must go through a strong break, in fact, of this zone here and this zone there, okay? We have just recreated liquidity above the CME gap. Overall, for me here, we are more about pure and hard manipulation, and we can clearly see that the market makers are at work at the moment for liquidation, and in any case, it is seen a lot. I mean, when we see the liquidations linked to this movement, namely that we have had a lot of things happen. At the BTC level, we had profit-taking by BTC miners. So which is also rather classic in this end-of-year period. It happens systematically. It's not something abnormal. At the end of the year, a miner, therefore large companies specializing in mining, will liquidate part of their assets that they have kept, especially since we have a good valuation to validate. Part of the profit. Understand that a miner is only profitable from the moment he has actually sold these BTC. Otherwise, it is the same principle when you are in trade, and you are in positive, but you do not have cash out of your trade. You are not really in positive agree. It is the fact of going behind in USDT or in USD or whatever the currency. This is what allows you to validate. So we had a big sell-off behind big triggering of liquidation of the levers, which is rather classic. And what is also interesting to see is that we had a nice acceleration in the longs of the top traders. There are two possibilities. Either we find ourselves in a pure purchase of this low there, this which could be coherent in relation to the different wicks that we see, where we can clearly see that we have bought back this wick and bought back this wick, or second possibility, we find ourselves taking a profit from the hedging shorts which have been put in position as a reminder throughout this phase 2. All right? During this whole phase, we clearly see an inflection, so I think that there was a construction of shorts, and here a taking of profit from the shorts which were carried out by hedging, and therefore we could very well have a new implementation, and therefore we could have a drop for a new implementation of hedging shorts to in fact cover the long positions of top traders, which is rather classic in terms of structuring. Another point which is interesting and above all very important is that yes, for me, we are going to continue this bearish leg. Are we going to do it right away? Or are we going to lateralize a little? Where are we going to do our two retests that we have had in mind for some time? We will see that together. But what is really important is that we have a brand of cap dominance which is breaking, bearish. We completely swallowed last week. We are sinking. Here. And it is very, very important because it is something which is different from usual. It is not something normal. We have a BTC which flash crashes, in any case which still takes easily 5 of negative, and next to it we have a total of 3, which in turn manages to maintain, and especially in this phase yesterday, we swallowed part of the bearish candle that we had yesterday morning, okay? So this means that we have a signal that the alts are relatively strong, and in fact, it is dollars. Not all alts, it's a certain number of alts. When we look, we clearly see the inflection. All of these curves which represent all of the alts in relation to BTC. We clearly see an inflection which is downward. So many alts follow the movement of the BTC, yes. But on the other hand, we have ING which has completely ripped up the ground while we had BTC which was growing. And then we don't forget our friend AVAX. I covered it for you in great detail, telling you that it was undervalued. We see that despite the crash of BTC, so yes, we have a little pre-flexion, we have a little reaction. But overall, we continue to push. So that means that we have outperformance of the alt while we find ourselves on a BTC which has a lot of difficulty in fact staying and maintaining in its zone, and a BTC which has liquidated a lot of people. So here we still have a scenario which is slightly different, and which will be interesting to follow because it also means that we could very well have a form of redemption which could take place, a much greater transfer of liquidity than, historically, on a final downward acceleration before being able to start again. In any case, we will maintain our zone, because for me the first intervention zones will be between 42,800 and 43,500, in which we could have very important levels that could be played. Even if we have a small CME gap here that we see, we keep it in mind, but we haven't noted it, but we keep it in mind anyway. And for me, the lower extension would be here, 38,000, 37,000, because we don't forget that we always have these liquidation closers. Very important in 39,000. So level here, very important too. 39,000, we're going to put them back here. We're going to get there. 39,000, we see that in the 39,000, we find ourselves here in the rupture zone. In fact, it was the first rupture zone. Retest and reaccelerate. So it's a very important area, and then we have the 37,000, which we already talked about yesterday with a lot of use, which could be the arrival zone, and which also corresponds to the Fibonacci extension for the bearish impulse. First impulse, retracement, continuity of the price. Obviously, if we have a retracement which is much stronger, we will have to readjust, but as usual, we adapt to the price. We do not try to apply our bias to the price, it is of no use. We just simply have to read what we are shown. That's all for today. I hope you liked it. If so, don't forget to leave me a like, a comment, and to share the video. It supports the work I do, and above all, it makes me very happy. And we get together to talk about Pundle, a crypto which I already told you was going to outperform. That was the case. We'll come back to it at 13:30.